So hello traders, welcome back to another shoot. So today I'm going to take you through the market breakdown. So I'm going to go through market analysis. Caleb has been doing for the last I think 2 weeks, so it's now time for me to share with you what I think about markets. I think generally how markets quite hot, quite cold. So I'd say we're in a Goldilocks period, not very hot, not very cold. Markets are just moving quite smoothly. Fundamentals are also sort of like relaxing. If you see what's happening in China, if you look at what is happening with Israel, there isn't much of a catalyst, for a big move in the market. For big investors, they normally call this time a time to do nothing, when there's nothing as exciting and as interesting. However, we have some highlights here and there. For example, Nvidia becomes the most valuable company, beating Apple and Microsoft, as AI becomes one of the next waves or next trends of valuable companies. And we know that once a trend is established, there's a risk that people will overdo that trend. I'd say that for the stock, but I wouldn't want to be very, very opinionated about it. I have my general opinions about it, but I've not really focused on those markets that much for me to have an opinion on them. But it's quite interesting to be able to finally share with you from a technical perspective what I think is likely to happen in the market. Last week I never traded. This week I found some very good positions which I've executed, and that's what I'm going to be sharing with you. Do I know whether the trades will work? Definitely not. Do I know whether I'll make money? Definitely not. All I can say is they're good trades, and my job as a trader is to just look for good opportunities, take them, and wait for the next good opportunities that will come in the market. So I'll start my analysis from gold, which is one of the markets that I really enjoy trading. Gold has been quite hot for quite some time, but right now it's relaxing. So I'll go through gold, I'll look at oil, I'll look at US 100, I'll look at the dollar, and probably some pairs around the dollar like GBPUSD and Euro USD. So if I go down to the charts, okay, and I start with opening the chart for gold. So as I'm doing this analysis, I always like telling my students that, or anyone who's interested in learning how to trade, what is important for you to learn is not necessarily if I'm long or short, or if I'm looking for the markets to visit a particular level. Not necessarily. My thought process is what is important. Why do I think this market is likely to go down? Why do I think this market is likely to go up? What tells me when I'm wrong? What tells me when I'm right? And what other indicators am I watching? So if we look at a market like gold from a weekly perspective, so my trading style is swing trading. I tend to hold positions for 2, 3, 4, 5 days. I look at trends primarily on the daily and on the 4-hour time frame for execution. So I don't really go lower on the 15 minutes or very high on the monthly. I'm there in the middle. Now, if you look at it from a weekly perspective, gold has been in a bullish market for quite some time. We had a run from around 2,000 in April all the way to top at about 2,400. We then had a consolidation, between 2,400 and the 2,300 level. Not a very strong consolidation, but sort of a sideways movement. There wasn't that much clarity. However, over the last few weeks, we've seen a collapse, from 2,400, sending markets back to 2,300. We then had a move higher, and then we retested the fair value area, and prices now have opened, and it looks like they're going down lower. So currently, gold is down about 0.13% for the day. It's start of New York right now. We are 30 minutes into the start of New York, and markets have not done much. So if I look at it from a daily perspective, you can see clearly that gold started moving lower. So we can see we had this rejection of the 2,400 level. We had a sell-off taking markets back all the way to fair value area. We then had a correction, and then we had another sell-off. And it looks like right now we've gotten a sort of a accumulation of orders, or at least some people are selling markets, or markets are moving sideways. There isn't much of a trend. It's just an accumulation of orders for the last few days. If I go down to the 4-hour time frame, how the accumulation of order looks like, it's in the form of an ascending triangle. Okay, so if you just observe what markets have done, we've basically seen you know, a move higher, a collapse, a move higher, a collapse, and then we've gotten another move higher, and we've seen some rejections from the candles. You can see the shooting star rejection pointing that prices are likely to go down lower. So as for me and my house, I'm looking for markets to keep moving lower. I think gold still has some downside. Do I think the bullish trend is over? Not yet. Do I think we're in a correction phase? Quite the much. So I tend to think that we'll have a correction, you know, back to about 22.89, 22.90, probably 22.75, 22.50. And after markets have now finally gone back to those levels, you can now start looking for bullish plays. But for this week and probably the next few weeks, I'll be looking for gold to be selling off. Now, the other market that I'll look at is oil. And the oil market has been quite hot over the last few weeks. We saw OPEC saying they will be pumping in production. Saudi Arabia did the same, and oil prices immediately collapsed, you know, moving all the way from around 77.5 that week down to about 72.5. But again, we found some support at 72.5, and ever since, prices have recovered back all the way to about $80 a barrel. Now, let's look at it from a big picture perspective down to what we have on the lower time frames, okay? Now, if you look at it from a big picture perspective, you can see quite clear there that oil has bounced off a line or a counter trend line around the fair value area, and they've started seeing some moves higher. Now, the question is, will we get a solid close above $80 a barrel for the week? If we do, and prices keep moving higher, we could easily visit $90 a barrel and $100 a barrel on the oil markets, especially with rates starting to come down lower, which basically means it is sort of an expansive policy in a expansive economy. If you look at what the American economy has been doing, it's been quite resilient from the jobs perspective. Inflation has also come down significantly, as much as it's not fully tamed. And again, if you look at other indicators like growth, it's slowing down, but we have still not seen any negative quarters. So the economy looks like it's very strong, because and all this is happening amidst rates being at 5.5%, the highest we've seen for a couple of years. So what does that tell us as investors or people who are looking for opportunities? It tells us that once the Fed start lowering, we're likely to see higher asset prices. And if you look at the stock market in America, it's been making new all-time highs, you know. Like the NASDAQ this week has traded as high as 19,960 or 70. A high never seen in the history of the stock market. And if the policies remain the same, we could keep seeing these markets move higher. So for me on oil, that's my first scenario. I'd only pivot to short if we see a good close below $75 a barrel on the weekly chart and a close below the counter trend line I've just talked about. Now, if I go to the daily chart, you can see clearly that markets are moving lower, found support at S3, and now we've been moving higher. You know, we've closed above $80 a barrel, a straight leg from around 72.5, straight leg back to $80 a barrel. If we keep moving higher, we could easily see 82.5, a break of that, and you could easily see $85 a barrel. If I look at it from a 4-hour perspective, you can see quite clearly that the markets opened around the fair value area for this week, and then we had a rally from the fair value area, taking markets as high as the R2 level by now when I'm doing this analysis. So we had this sort of a flag formation around here, which was a beautiful pattern. If you trade these patterns, you could have capitalized on this one. Quite a good setup. You know, prices rejected $75 a barrel and moved higher, you know, breaking past R2, and right now we're trading there. So if prices start moving lower, probably a minor correction back to R1. If we break R1, we could easily go down lower, or we could keep moving higher. But these are some of the markets where if you were to follow my view, you'd clearly see that there is nothing as attractive. You know, you have your outlook, but there isn't a very valid risk-reward proposition for you to be trading that market or taking part in that market. So you can sort of stay out of that trade. Now, if you look at NASDAQ has been doing significantly well. I pity anyone who's been trying to sell these markets, because I think if you're trying to sell these stocks, you have not really studied history well. Anytime in the markets there is good policies and prices start moving high and you're making new all-time highs and the policies have not changed, you can expect the stock market to be more irrational than you can be rational. I'm sure many people right now, especially seasoned traders, guys who've been in the market for years, they tend to think that these markets are not fairly valued, or if we use the terms that Buffett would use, these markets are not cheap at the moment. If you're interested in buying a stock like Nvidia, it's up over 200% or 300%. Is this a time to buy? Yes, for momentum investors. But for value investors, I don't think this is a time to buy. I think the risks are too high, that as much as there is some upside, the risks of the downside are quite low. So, and you look at risk in that relationship. What upside do I have? What downside do I have? So for me, I'd be willing to wait, especially if I'm willing to buy some of these markets long term. Now, if you look at them from a weekly perspective, technically, you'll see that the NASDAQ has moved from about, I think, 18,000, 18,500, somewhere around there, to trade as high as 20,000 over the last like 2 or 3 weeks. The move was catalyzed obviously by the start of central banks cutting rates. So the Feds have not cut rates, yes, but we've seen Canada, they've cut rates, and the European Central Bank have also cut rates. So that's very suggestive of what the Fed is likely to do, as much as the Fed passed on cutting rates, which would have made markets sell off. But you can see clearly markets are still aggressive, so the trend still remains the same to the upside. How high do I think stocks will go? I don't know, and I'm not really concerned with that. What I'm concerned about is, when will policies start changing, and when will we start getting a change in the trend direction, or a change in the move in the market. For now, I'm still a net buyer, looking for prices to keep moving higher. On the daily time frame, you can see the momentum we're talking about here. This is the move I was looking for. From about 17,000 to 20,000, new all-time highs in the NASDAQ. I think the NASDAQ is up significantly for this year. I'd want to know in exact percentages, how high is the NASDAQ for the year. But I think the NASDAQ is up more than 30 or 40% for the year. Let's see. So this is October. So this is January, yeah. So this would mark January. From around 16,000 to trade as high as 20,000. That the market is up more than 20%, because 20% on 16,000 would bring us to 19,200. We had 20. So the market is up 24-25% in 6 months. That means even no other investment could beat just buying the NASDAQ and holding it for the year. Last year it did around 40%. This year it's up already 20%, and we are halfway. We are midway through the year. And that's why most of you will be told, rather than active trading, you'd rather put your money in an index, because the index is up 25%. I'm sure most traders have lost money for the year. They have not made any money for the year. They are down for the year. But the NASDAQ is up 25%. So it's also a good way to invest or be exposed in the financial markets without the stress of looking daily at what the price is doing. On the 4-hour time frame, if you look at it, we can see that generally prices are trading at R3, R2 levels, which basically means for the short term they're quite overvalued or frothy. So I'd look for a correction lower before the trend continues. Probably a move back to retest 19,000 or 18,000, 19,500. That would be the first thing that I'd be looking for. Unless prices cross above the 20,000 level, and more specifically 20,250, I'd still be short, looking for markets to at least correct back to 19,750, 19,500, and probably even take us to lower prices. So that's my outlook on the NASDAQ. The next market I'll look at is GBPUSD. So GBPUSD, I currently have an active position on this trade. So if you look at this market from a daily perspective, let's start from a weekly perspective. 1 week. So from a weekly perspective, we can see that markets are somehow beginning to move lower. So last week we had a very suggestive shooting star that prices are likely to move lower after rejecting this line. So we could be looking for prices to come back to retest the 1.25 level, and if we break the 1.25 level, we could definitely see 1.2 and probably the S2 level here, which comes in at 1.175. However, this move will only take place, especially back down all the way to 1.175, if rates in the US stay longer more than people expect. So I'd want to see no rate cut in July, probably no rate cut in September, and probably no rate cut in December. That would warrant pound moving lower. The longer we stay without a rate cut, the longer the pound is likely to keep moving lower. However, I could also be wrong and prices, just move higher. I wouldn't be surprised. I think I've been wrong multiple times in this market. Now, if you look at it from the daily perspective, markets are somehow trapped in this consolidation. We moved lower, came back, moved lower, came back. So we're bouncing off the trend lines a couple of times. So if prices remain below 1.275, we could easily come back to S1. And if we break S1, we could easily visit the S2 level, which is the next downside target. On the 4-hour time frame, if you just open the 4-hour time frame, so let me open the 4-hour time frame. So on the 4-hour time frame, we've gotten a flag formation. Okay, so markets have gone lower, and then we have entered into this flag formation, suggesting that prices are likely to still keep moving lower. So if prices move lower, I'm looking for a move to 1.2625. If we break that, we could probably see 1.25. For now, I'm short to 1.25. I think 25 is the magnet I'm looking for. That's the price I really want to see. By the time pound gets there, where will policy be? What will the Feds be doing? How will inflation be? And generally, how will even the Bank of England be doing? That will determine. But for now, I'm short all the way to 1.25, especially if prices remain below the 1.275 level. The last pair that I'll look at is Euro USD. So Euro USD, I have the same bias to GBPUSD. The pairs are quite correlated. If you look at GBPUSD for Euro USD, I mean, from the weekly chart, it has almost the same patterns, only at different points. Okay, so if you look at it, you can see clearly that also the market is moving lower. I'm looking for a correction back to S2, somewhere around there, 1.04, but I'd be first keen to see 1.05. And again, I'd want to see even a break of this counter trend line for this week or the coming week for me to know that the shorts are still active. On the daily chart, if you look at the euro, the market is trading around the 1.075 level. So we've gotten a steep collapse. Last week we got a steep collapse, taking markets lower, but this week we've come back to retest this quarter level. If we stay below this level, we could easily come back and move lower to the S3 level, which is the next downside target. On the 4-hour chart, I have this 3-drive pattern. We're looking for markets to tap into that 3-drive pattern, and you could see a sell-off back all the way to the 1.0625 level. So those are the setups I'm watching. Those are the markets that I'm watching. I hope you guys will learn 1 or 2 things about how I think about markets. Fundamentally, not much taking place this week. Last week, we had a heavy fundamental week where we had interest rates, we had inflation, and many other things. This week we don't have much. We're just waiting on to see how the markets will fare, and then we can know how to position ourselves. So with that said, I'll see you guys next time, and we'll catch up in the next video. As you always say, stay woke, stay financially literate.